and welcome to Money Talk by BOV in collaboration with Times of Malta. My name is James Cummings, and today we're going to be discussing something called financial well-being, what it means, how important it is, and how we can approach getting it. So today, here to talk about that is Daniel Magrin. Hi, Daniel.
Thanks for having me. Hi.
Thank you. What can you tell us about financial well-being? What does it mean?
So financial well-being is actually a term that we've been hearing about a lot lately, and is the third pillar of well-being. So we've got physical well-being, which everyone is aware of, mental well-being, which is also very, very important, and now financial well-being, which has always been important, but lately awareness has grew around the subject. And they are all interdependent, because if you take care of your physical well-being, then you'd be spending less money on fixing the problems that you didn't take care of in the first place. And if you take care of your mental well-being, it's in the same manner, you will save money in the long term. And if you are not financially well, that will impinge on your mental well-being. So they are very interdependent, very important, all of them.
Really? So it's really kind of looking at it a bit like any other form of health, I guess, then? Yeah. Okay, lovely. Now, I guess the sort of obvious question is what steps people can take to get there, to achieve what you've just talked about. And what are some of the ways people can maybe go about this? How should they approach it?
Okay, firstly, we need to erase the misconception or correct the misconception that to be financially well, you need to be very rich. So everyone can achieve financial well-being within his means. Okay, so financial well-being is about having the confidence that you can meet your monthly commitments with no extraordinary effort, having also an emergency fund in case something happens along the way, and that is calculated usually roughly about 3 months of your salary, and also having a long-term investments plan to sustain your lifestyle in the longer term.
Really? Okay. It's interesting there about the kind of 3 months. Does that kind of end up being, for people, no matter their circumstances, does that sort of tend to be a bit of a magic number maybe for just in terms of having a bit of a buffer, right?
Yeah.
Yeah. Okay, lovely. Now, because I guess the other thing is that people maybe have different relationships with money. You know, there are some people who maybe spend more naturally, and some people who naturally kind of save more. You know, I mean, how does this kind of link in with this beyond this thing of saving, say 3 months, having that as a buffer? How do you get these different personality types, and how does that impact what you're talking about?
Yes, there are a number of personality types actually, which are influenced. We are all influenced by our own upbringing. Our money attitudes are influenced by our upbringing, and they are also influenced by our perceptions as we go through life. So by our income, by our level of income, and the perceptions of money as we grow. With respect to the personality types, there are quite a few. The most common are perhaps the compulsive saver. So you've got the miser, sort of, the one who always saves money, but then that is wrong in its own way, because you don't get to enjoy life and you miss the opportunities as you go along. There's the compulsive spender, who doesn't manage to get by with his salary until the end of the month, is panicking by the third week, etc., etc. Then you've got the saver splurger, and going from one extreme to another, saving too much and then splurging too much, which is also wrong in its own way, because you go through a lot of stress as you go through these cycles. There are people who worry too much, so for them money is something stressful, and they avoid thinking about money. And then there are the indifferent ones. So these are the ones who don't open the bills, don't open the post, and you know, are completely indifferent towards money.
Really, and it's not because they're necessarily scared to open that mail, they just don't really care. Is that what you're saying?
Yes,
yes.
So these are all pigeon. I mean, here we're pigeonholing. Sometimes you have a bit of both. It's important to take a very introspective look about your attitudes towards money. Think long and hard about the attitudes, the good attitudes you have, the less good attitudes they have, or the bad attitudes that you need to correct, and correct them as early as possible in life.
Right, I see.
Today, there is a lot of literacy, there is a lot of material out there which is freely available. So it's no excuse to avoid this subject altogether and unfortunately go through life not correcting these attitudes.
Yeah, it's quite interesting, isn't it? I think people maybe don't really ever stop to think about what maybe kind of personality they are in terms of money, right? They might think about general life things, maybe general personality traits, but what you're saying there, I think probably makes a lot of sense. And you probably, as a bank, you probably see a bit of everything, I guess, with this, right?
Yes. I think it's a very personal matter. You need to define your enough. You need to define your expectations from your lifestyle. What kind of lifestyle do you want to live? And then you need to balance that out with your income. So of course, if you are willing to work a lot and then have a lavish lifestyle, perhaps you can manage that. If you are not willing to work a lot and you want to have a more balanced lifestyle, that's also another possibility. So everybody needs to define their expected level of lifestyle, how much they're willing to work within the competencies that they have, within the jobs that they can manage to get, and achieve the right balance for them to achieve financial well-being. I mean, the imbalance, the financial trouble comes when the expectations do not match reality, are not in line with reality.
So there's not really, just from what you said there, it sounds like there's no sort of right or wrong, if you like. It's more what's right for you, and maybe, I mean, you mentioned this idea of balance, right?
It's a very personal matter that everyone needs to establish in his own right.
Right, okay. So in terms of then approaching that, maybe if someone wants to, change their behavior maybe, or just become more kind of, I guess, literate about this. I mean, before, when we were chatting before, you mentioned this term financial literacy, right? So maybe this is a good moment to kind of, explore that a little bit. And what do we mean by that, for example, financial literacy? Yeah.
So financial literacy seems to be a big term, but I like to compare it to nutrition, for example. Okay, everybody needs to have at least a basic level of nutrition, even if you don't eat healthy all the time. But you know what's healthy and what's not. You know what's good for you and what's not. And you need every person needs to have at least a basic understanding of money, a basic understanding of market, a basic understanding of pensions, etc., to have the confidence, as we said earlier, to live by in the now and sustain that lifestyle in the longer term.
Yeah, and it's kind of interesting. I feel like, and maybe you tell me I'm wrong, I don't know, because obviously this is what you guys do here and what the banking sector does, full stop, right? But it seems to me that it's one of those things that maybe people only really find out about these things when they come to do it. So they first learn about, you mentioned, for example, pensions there, and I've seen this with, friends buying houses and stuff. That's the point they learn about how mortgages function and what have you. But it sounds like kind of what you're saying is to maybe kind of become a bit familiar with those concepts beforehand. And maybe that helps with planning. I don't know.
This is exactly a very crucial problem. So as you see from the Central Bank of Malta trends, you see deposits growing year on year, okay? And that is a good sign. But it is not a good sign if you have your own deposits and not having a long-term savings plan. It means that you're postponing the decision, putting your extra money, your savings, just in deposits, in savings account, short-term savings account, which have a lower yield, but then they are getting eroded by the rate of inflation, and your money is not growing over time to sustain you post-retirement.
Right. Okay.
This is an issue that we're trying to address by educating people about inflation, about the importance of having a long-term investment plan, such as a pension plan, which is consistently growing.
Really. And for people who might feel maybe a little bit overwhelmed with these things, which I think is very normal, right? I mean, these things can be quite kind of maybe a bit confusing for people. They've certainly been confusing for me in the past, you know. I mean, what are the ways to kind of, you know, address that? And I guess kind of like learn about it more. What's a good starting point maybe for people?
And that is perfectly understandable. I think the two major challenges is the subject is overwhelming in itself, and number two, it is very personal, to a point that people are at times reluctant to talk about it. But then again, the importance of financial well-being makes it the more critical to open up to professional people who can guide you in the longer term. So they will assess the level of risk that you can tolerate. They will assess your income. They will assess your expectations, and they will set a long-term path for you to be able to sustain your lifestyle in the longer term. And by that, having that confidence that you have these professionals behind you, you will achieve financial well-being. You will set your mind at rest that your finances are sorted.
I see. So sort of to close off, if there's someone who's maybe watching this, you know, who maybe this is new to, and they're interested in more of this. I mean, what's the kind of maybe first place to start? Is it as simple as going to a search engine and trying to find some things out? You know, what would you recommend?
Financial planning is very accessible. One can access financial planning services through our branches, make the first contact there, and then depending on the particular case, on the particular portfolio, we can guide him or her accordingly to the right level of service that is suitable to him or her. One tip that I give to everyone: get your finances right as early as possible in life, because that is the only way to accumulate wealth.
Yeah, absolutely. Okay, brilliant. Thank you.
Thank you.
Thank you, Daniel. And thank you to you for watching. This was Money Talk by BOV in collaboration with Times of Malta. We'll be back next time. Until then, thanks a lot and see you soon.